Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Monday, December the 27th. The year's 2021. Let's talk trading, keeping it simple, step by step. These videos are for educational purposes only. Your results may differ from mine. So we are wrapping up December, the last week, trading week of the month, the last trading week of the year. And we decided to dedicate December to keeping it simple. So step by step, I'm talking about trading. What's the first thing you do? You decide you're going to trade. So what's your first step? Well, most likely you're going to decide the what's of trading. What am I going to trade? What market? What instrument in that market? So we decided here we're trading FOREX, and Walmart decided to trade the pound dollar. Before I started trading with Walmart, I was trading dollar yen. I decided to switch. So that's the what. Then one more what. What method? Well, Walmart had his Walmart method based off of my method of trading the horizontal lines with the H1 candle color. And we kind of refined it, and we've come up with a couple other methods since then, which are basically derivations of previous methods that I've come up with over the years. So that's pretty much the what. Then the next thing is how much. How much do you fund the account? How much do you risk per trade? How much do you look to make? Simple questions we have to answer. And then finally, along with the method, it's like we have to say when. When do we enter? When do we exit? So to me, those are really simple questions. And after you've decided on your method and you've decided on the risk, you don't really have to answer those questions anymore. You just have to execute the answers. As far as the entry, keeping it simple step by step, well, your entry method should have certain steps, based on what's going on the chart, certain conditions. And somebody had asked about trading at previous daily and weekly highs and lows. And it kind of hit me that, to me, that was kind of obvious and simple. But you know what? If today was my first day of trading and somebody said trade the highs and lows, I'm not sure I would know what to do either. So we've got the TRO plot indicator loaded, and that's this indicator right here. And let's just shift over to the daily. And yesterday I had mentioned that the previous day, the Friday candle, the 24th, was an inside bar. And you'd look to go long at the high, the previous daily high. And you can see right here, we are 7.2 pips above that. But we actually reached, let's see, 41 versus 19. Quick calculation, that's 22 pips. So there was an opportunity to make 22 pips had you taken that. Now, I'm sure there's the whipsaw people who are going to tell me, well, it might have whipsawed there and you could have been stopped out. So if we look at the hourly, it doesn't appear that happened. But let's go all the way down to M1 and see what that looks like. Well, it broke it, and then it pulled back, then it broke it bigger, and then it pulled back, and then it just moved up. Because see, price doesn't move in a straight line. It moves up and down, as you see here. And then and their question was, well, about the, daily high and weekly high. Well, here's the previous week's high. Once again, it broke it, pulled back a little bit, broke it some more, and then come back the other way. And that's on the 1 minute. You know, I can't really show you the tick chart because we don't really have that tick history to do. But it should be pretty simple. Now, somebody had said something about, they made a comment that I sound like the other people out there and say it's easy. I don't say it's easy. I say it's simple. It's not necessarily the same. And I always like to use the weightlifting analogy. Lifting weights is simple. Picking up a 1 or 5 pound weight, that's easy. Picking up a 10-pound, weight, that's pretty easy too. Let's move up to 50 pounds. For some people, not so easy. For most of us, we could pick up 50 pounds, 100 pounds. Ooh, a little more difficult. How about 200? If you take it all the way up to 500, there's only, maybe a few dozen people in the world, maybe a couple hundred can lift 500 pounds. Point being is weightlifting's simple. Once you get the form down, proper form, it's simple. But the more weight, the harder it is. So that's why I say trading is simple, because it's just simply entering, when a condition is met or conditions are met. And you get to decide what those conditions are. For me, it's pretty much candle color out a horizontal line. Not much to think about. Now, as I mentioned before, I like to trade with either the H1, even though I have been shifting over to M30, only because on the pound dollar, we have observed this phenomenon that a lot of times at the bottom of the hour, price will reverse. So if you look here, this was a 30 candle, price reversed. If you look here, this was a double O candle. Here's a 30 candle, price reversed. And it's basically just something to look for. So I hope this answers that question about how to trade at horizontal lines. And let me know if you still have questions about it, because I've been doing this for, decades. So it's just something that just comes natural to me. I've learned it. I don't really think much about it, but if there's something about, well, what do you do? And then just let me know. And then somebody else asked me about, the proper placement of stop loss and, when to take profit. Once again, to me, the stop loss is a function of the risk. How much are you willing to lose per trade? So if you've got $1,000 account, you're willing to lose, say, $20 a trade, and you trade one mini lot, well, then you can lose 20 pips. If you trade 2 mini lots, then you can lose 10 pips. And that's so if you were to enter the trade here and you had 2 mini lots, then you put if you're going long, then you have a 10 pip stop loss. And as you can see here, we had a low of 15, that's 19. So if you entered there, worst case scenario was you was down 4 pips. Your stop wasn't even threatened. And that's pretty much what trading is, because, once you enter the trade here, you're either waiting to take profit or waiting to exit with the loss. There's nothing more you can do. Now, some of us, what might happen is if we get in the trade, let's say we took this long and then it started coming back the other way. Some of us might not want to give up on the trade. So we're in a loss. and then we'll add to it, and then hope it starts to come back, and then maybe we can exit all of the trades with a break even or maybe just slight profit. So what we want to do is get rid of some of that, if not all of that loss, as opposed to just booking the loss and waiting for the next trade. And it's usually smarter to book the loss and then make it back than it is to sustain a big loss. But once again, so long as you're within your risk parameters, it's okay. So for example, let's say you wanted to risk no more than $20 per trade, but instead of putting on too many lots, maybe you only put on one. So it came down to here, and then you said, hold on just a, okay, back to you. So as I was saying, maybe you put on a 1 mini lot trade. It didn't quite hit the 20 pip loss because it would be 17.2, and we haven't quite hit there. So maybe right here you add it in. Maybe you add it in heavy instead of going with adding one more mini lot. Maybe you added 2 or 3, and when price started to move, maybe you punched out for a small profit or just to negate the loss. I don't suggest anyone do that. So just remember, these videos are for educational purposes only, and your results may differ from mine. So that's pretty much it. I mean, keeping it simple. We decide on, what market we trade, what instrument, or in this case, FOREX and the pound. We decide what method. In this case, horizontal lines, going with price action at the horizontal line, trading in the direction price is crossing the horizontal line. And as you can see here, we're at the bottom of the hour. So we might want to look for price to do one of those reversals. We decide how much to risk, and we might decide ahead of time how much profit we expect to gain out of that particular trade. Then the entry method tells us when do we enter. We basically ask the questions, are the entry conditions present? If so, we enter. If not, we wait. As I've mentioned many times, trading is waiting. You wait to enter, you wait to exit, you exit, and you're waiting to enter again. And it only takes a second or two to click that mouse and get that trade filled. And then you're back to waiting. So, fellow traders, please, if that explanation isn't, crystal clear, let me know and ask a specific question where you say you don't understand something. And, no questions are too simple, easy, or, it's not a stupid question if you don't understand. So one of the things I just wanted to point out was from today, you can see here we got into the ATR zone and price pulled back. And actually, we were in the launch pad in the 40s, but price couldn't hold it and it moved back. I believe there's some British holidays happening, so this is probably going to be another lightly traded day, but anything can happen, so just be aware. So, fellow traders, the next time you sit down at your trading platform, always remember, never forget, it's not what you trade, it's how you trade it. So go out there and brain the bank. Go out there and drain the banks. Brain them. That's too funny. So, and this is the Rumpled One over and out.